deliver consistent high purity products to
Stuart, really appreciate you joining me following the release of your research note on pure hydrogen, where you have placed a valuation of between 63 and 79 cents versus the company's current share price, which is hovering around the 20 cent mark. Firstly, could you just talk me through how you came up with your valuation and where do you see the upside in pure hydrogen?
Yeah, certainly. Well, as pure hydrogen has no production or cash flow, we can't use traditional valuation methods such as earnings or cash flow valuations. However, this is not unusual for small mining and oil companies, and there are dozens of small gas companies in the pre-development phase for gas in Australia. And investors in these companies are pricing the gas resource or reserves ahead of any development. So therefore, we have a fairly good peer group, which is pricing the gas molecules on a per gigajoule basis, and that's an energy equivalent basis. Currently, that peer group averages about 22 cents per gigajoule, whereas pure hydrogen is trading at about 12. And we can't find a particularly good reason for such a steep discount. And pure hydrogen is, in fact, towards the lower end of a group of companies which we show in the report. And we think that at least the peer group averages is a more reasonable reflection of its gas resources, given their location and the amount of work that's been done to discover them and appraise them to this point. And those reserves and resources have been independently audited by independent reserve audit companies. So, we put a lot of confidence in that as a measure.
Okay, Stuart, so where do you see the value opportunity in Pure's hydrogen strategy?
Yes, well, a hydrogen strategy and a hydrogen valuation is interesting. We are moving into a decarbonising world, and the hydrogen business is fascinating in that it leverages their natural gas position. Most hydrogen today is manufactured from either gas or coal, and the trick is getting rid of the carbon. So the value in what they're trying to do is to take the gas and turn it into hydrogen, which itself is quite valuable, but also do it in a way that doesn't result in any carbon emissions. Their technology they've chosen will result in a solid product, being graphite or carbon black, which can be stored, transported, and indeed sold, but importantly, no CO2 emissions. So you can take your gas, produce hydrogen, and the whole process will be green. Now, there are companies on the ASX that are listed now trying to do similar projects, 3 or 4 of them at least, at the various concept stage. And we use those peers to place a value around what pure hydrogen have at the moment. Some of those companies are trading as high as $200 million in the market. We think that if pure hydrogen was to spin this business out separately, it would be trading in around $50 to $100 million as an independent company. Quite subjective, but there's clearly value being ascribed by investors to green companies, to use the word, and anyone that's got an idea around how to solve the carbon issue.
And finally, Stuart, in your research note, you went in depth on the state of play of the East Coast gas market, which appears to be on the improve. Given Pure's portfolio of CSG assets in Queensland, Surat and Cooper basins, how do you see the gas market impacting those projects over the next 3 to 5 years?
Yes, well, the Eastern Australian gas market is indeed tightening again. We see this every winter, and the Australian Energy Market Operator that monitors this, in its most recent report issued in March this year, highlighted a potentially large deficit, a structural deficit from 2023, and growing over time from that year, and that can only be filled by either of LNG imports or supply from new projects. Pure hydrogen has large gas resources in both Queensland and Cooper Basin, not far from existing infrastructure. These are being appraised for commercial development now, so they have an excellent market opportunity 2 or 3 years out from now to participate in meeting that market shortfall. And I should note too also that this has become quite urgent at the governmental level. Both the federal and Queensland governments have recognised that they've variously got gas strategies out there, putting a bit of money to work, helping small companies and others to try to bring some of these new projects to market.
Fantastic, Stuart. Really appreciate your insights. Thanks for joining me.
Thanks, Alex.